Welcome to the latest episode of The Financial Frontier. I'm your host, Patrick Camuso. I'm very excited for today's episode. There's a lot to get into in the headlines related to tax accounting and regulatory topics for cryptocurrency, digital assets, and Web3. So I'd like to get right into it today. I'm going to start by sharing my screen so I can show you guys some of the highlights and topics that I'm discussing today in the headlines. If you're not a video listener, if you're on podcast platforms, listen along. I'll be able to describe everything that we're discussing. If you are listening on a video platform or watching on a video platform, such as LinkedIn, Twitter, YouTube, or other platforms, you can watch along and see exactly what we're discussing. So to get started, we will be hosting through my firm at Camuso CPA an AMA, a crypto CPA AMA. This will be on June 27th. You can go over to LinkedIn and sign up for this. This is your chance to ask me any type of question that's top of mind related to taxes, accounting, regulatory topics. I'll be able to answer these in a straightforward and candid format live in real time. So you can ask these questions during this event, basically just type it in when we're there, or you can reach out to me now, shoot me a message, drop me an email with your question. I'm making a list of them and I have a pretty long list already, but send me your questions and we can include them in the list, and we'll make sure that we get those answered. Additionally, on July 11th, we'll be hosting through my firm at Camuso CPA how to choose an accounting subledger, how to chart your accounts, and best practices related to wallet hygiene. And this is something that's top of mind for anyone that is a Web3 CEO that is looking to set up your back office and get the foundation of your finances in order. So be sure to check this out if you're in that position, or if you're a CPA, tax professional, CFO that finds yourself in that position with clients. Next, I'd like to show Accounting Today actually did a profile on yours truly, Patrick Camuso, and my firm, Camuso CPA. This basically went over my experiences starting working at Deloitte, and then, building this financial services accounting background and tax background while building my personal interest and experience and passion in crypto and digital assets, and then eventually going along and combining those two, taking the leap, stepping out on my own, and starting my own firm, Camuso CPA, which I launched in 2016 to serve the crypto and Web3 industry. So be sure to check this out. This is a great write-up. I'm really proud that Accounting Today has featured me in this. And I'm also, happy that they featured me in this, because I do think this says something about the level of attention and respect that professional communities are starting to give crypto and our industry in general. The fact that they wanted to profile me as a crypto CPA in Accounting Today, I think, shows the legitimacy of the practice that I built within this industry that maybe, when I first started it wasn't taken as seriously, especially by professionals. So I think this is great to see. Let me see here. So the first topic of the day: U.S. lawmakers urge IRS Treasury to hurry up on crypto tax rules. So, Brad Sherman, we always see him in the mix here, trying to push for more crypto tax legislation, along with Stephen Lynch, sent a letter basically urging the IRS to hurry up with some of the tax regulations, mainly the broker regulations. For many years, the cryptocurrency industry has been a major source of tax evasion and a significant part of the nation's tax gap. He's alluding to the non-compliance here. Sherman, who is a senior member of the House committee, said, so they're putting out a press release. They're urging the IRS to move quicker with implementing the proposed broker regulations, because they believe that's going to help close the tax gap. Now, I've done whole entire separate videos, and we've actually asked a lot of our guests that we've brought on the Financial Frontier as well about the 1099 DA. I've given my opinion on it. You've heard a lot of other tax professionals give their opinion on it. So I'm not going to belabor this point too much, but there is still a big push related to this and to accelerate this that we're seeing politically speaking. So this is something that you want to keep an eye on, and I'm really interested to see where these broker regs go in the future. So more on the cryptocurrency or on the cryptocurrency tax enforcement. This isn't at the IRS level, this is at the federal level, but still interesting. Bitcoin billionaire to pay DC 40 million in tax fraud. Yes, Michael Saylor, co-founder of software firm MicroStrategy, who you've probably seen in the news before if you're in Bitcoin and crypto, and one of the wealthiest people in Washington, avoided paying tax in the city of Washington for over 15 years by claiming residency in Florida. So this finally caught up with him, like most tax schemes like this do. So he had to settle for $40 million. So he's considered one of the wealthiest people in Washington with a net worth of 4.6 billion. So basically, he for years should have had to pay a local income tax in Washington, and he wasn't paying this. And the way he wasn't paying it was by saying that his residency was in Florida, where there is no state tax. There's strict rules for what defines your residency in a given state. That's going to vary by each year based off of your facts and circumstances. Clearly, he wasn't meeting these based off of the fact that he had to settle this case, and he was sued. So what I thought was interesting here, not just the fact that this was going on, but it says here, Saylor openly bragged about his tax evasion scheme, encouraging his friends to follow his example and contending that anyone who paid taxes to the district was stupid. So they went on to say this president-setting settlement makes clear that no one in the District of Columbia, no matter how wealthy or powerful, is above the law. So under this agreement, Saylor and MicroStrategy denied that they violated the law and admitted no wrongdoing. So I do want to point that out, that this settlement doesn't indicate that they actually did commit tax evasion, but these are the claims against them. Now, what I thought was interesting here is that Saylor openly bragged about this tax evasion scheme, according to this article. And this is something that we see just a lot in the crypto community in general. I've been seeing this for years online, where people are basically publicly bragging about being non-compliant with their crypto taxes. And just like it says here, encouraging other people to do the same. Well, now you see the end result, and I believe we're going to see a lot of other headlines like this, others I've already covered, related to the tax evasion coming to a head and people paying the price for it. And it goes to show you that if you are as a taxpayer, if you have to make a tax decision, you shouldn't be listening to a friend that you have or someone on social media. You need to be making informed decisions personally for yourself that you're going to be able to live with over the long term. And you need to consult qualified tax professionals that can give you the lay of the land and inform you of the risks and the tax consequences associated with the decisions that you make. Don't just get advice from a friend on some sort of tax evasion scheme they're running, and 5 years later you're in some audit and your friend is nowhere to be found. So I thought this was interesting. Saylor went on to say, I continue to dispute the allegation that I was ever a resident of the District of Columbia. I've agreed to settle this matter to avoid the continued burden of litigation on friends, family, and myself. So again, Saylor doesn't admit to it, but at the end of the day, he ended up settling, and it ended up costing him big. That's another point, is that if you're spending a lot of time in some of these states that do have high taxes, like a Washington or a California or any of these other high tax states, you need to be very careful with your documentation and your overall facts and circumstances in terms of how long are you spending in this state each year. Because if you start to rise to the level of having residency, then you start to have a tax exposure there. So more tax settlements. FTX settles 24 billion tax dispute with the IRS. So they're going to have to pay $200 million within 60 days of court approval, and then another $685 million after compensating other creditors and customers. What's interesting is the IRS claimed $44 billion, and then it got knocked down to $24 billion, which shows you, just to what degree some of these tax debts can be negotiated with the IRS. So as it says here, the settlement provides much needed certainty for the FTX's creditors and customers regarding the recovery process. By resolving this tax dispute, they can now focus on implementing their reorganizations plan and distributing assets to stakeholders. This agreement helps to mitigate the risk of prolonged litigation, which would have further complicated the bankruptcy proceedings. So let's go on to the tax claim here. So FTX was contending that it had valid deductions and losses that the IRS unfairly, in their words, disallowed due to documentation issues. So basically, they're saying, hey, we had a bunch of deductions to reduce these tax liabilities, and the IRS was disallowing them because they didn't document them, which goes to show, once you're in this process getting scrutinized by the IRS, it's not enough to have a business connection associated with an expense you're claiming. You need to make sure that it's well documented so it can stand up to scrutiny. So, yep, they'll be settling this. This is great for creditors because it's just another issue that's closed, another open item that is not going to be holding up the bankruptcy proceeding, like is said here. Okay. So, in other news, Bloomberg Tax and Deloitte have announced the release of a comprehensive tax management portfolio on the taxation of cryptocurrency and other digital assets. So this will be a great reference and resource to any tax professional, CPA, accountant, CFO that's out there. Over the years, we've really had to earn this knowledge and tax research the hard way by going to primary sources and really building out our own databases of knowledge. So it's good to see, after all these years, Bloomberg and Deloitte coming together and putting something together like this that we're going to be able to leverage. So they're saying is the ultimate guide to the tax treatment of digital assets. Portfolio 190 examines the federal income taxation of digital assets, including cryptocurrencies. So I started some reading on this. This really just came out, so I'm going to be spending some time in here. But you can check this out. Here's a little bit of what it includes: introduction, overview, guidance to date, tax classifications, dealing, trading, using, and investing. And it goes on here. International tax, state taxation. Oh, so they do include some state taxation. So this is really interesting. I encourage everyone to check it out. You want as many resources as possible to make sure that you're on top of all this. The regulatory environment is highly complex. It's changing very quickly. The more resources, the better. So a lot of people are saying NFTs are dead. Of course, I disagree with them, but I thought this was interesting. Department of Treasury last month released the illicit finance risk of non-fungible tokens. So this is a report released by the IRS on some risks that are associated with NFTs, illicit finance risks. You'll see what they include in here. They include definition, types of NFTs, types of NFT platforms, how NFTs are created, and a general overview of the market. Then it starts to get into some of the threats associated with this, which include money laundering, investment fraud schemes, theft, proliferation finance, terrorist financing. So I'm not going to, this is pretty lengthy. I'm not going to go into each one of these, but I thought this was an interesting report to hear the perspective on some of the, financial risk associated. Then it gets into vulnerabilities, cyber-related, copyright and trademark, hype and fluctuating pricing, non-compliant NFT platforms. This is something I talk about a lot. AML CFT sanctions and obligations, investor protections, uneven application of AML CFT. So these are all really interesting issues that I believe that NFT platforms and marketplaces in the future are going to have to start mitigating a lot of these issues as we start to get more focus from regulators on NFTs. So again, I'm not going to get into this full report. It's very lengthy. But I encourage everyone to check this out because it is very interesting, and it is important if you're working with clients, especially marketplaces, to start making them aware of some of this so they can get out ahead of these issues. So next, Brazil's tax department to summon info from foreign crypto exchanges. So the Federal Revenue of Brazil has published an ordinance this week to look for any potential illegality and info on what Brazilians may be ordering in taxes. So they're going to publish an ordinance summoning firms for further information later this week. And this is going to be going after foreign cryptocurrency exchanges. So up until now, only local cryptocurrency exchanges have been obligated to report transactions conducted on their trading platforms. So last year, Brazil mandated a law that requires a 15% income tax on crypto profits. So there's a few that they have operating in their country, but they seem to be going after the data outside of their country, which is interesting. Now, Brazil isn't included in the J5, but there are agreements between the US, Australia, and other countries where they go and do John Doe audits in their local country, and then they all share them together, all that data. And Brazil seems to be now wanting to sort of follow suit and go after acquiring some of the data from exchanges that aren't in their home country. And they're doing what every revenue agency has been doing for quite some time. They're just building data on taxpayers, and they're understanding exactly who's reporting and who's not reporting, and they're going to go after the non-reporters. So this is just more data collection to push more overall tax compliance that we're seeing on an international level. And it's more or less exactly what we would expect. So, we'll keep an eye on this. Usually, these data collections, it's a slow roll, but these data collections are usually followed by some push of tax enforcement, some, tax notices going out to non-reporters. So, that's what I would expect next after this plays out. Next up, I want to remind you, we were just talking about non-compliance with NFTs, and a lot of people think NFTs are dead right now. I think that's the furthest thing from the truth. Not only do I think NFTs are not dead, but it's kind of like crypto back in the 2018 time frame, maybe after that big run up, then everyone's starting to say crypto's dead. A lot of people abandon it. No one really knows what's going on. And then we start to see more functionalities and use cases develop. That's what I believe we're going to see with NFTs. We saw this first hype and mania stage, and what we're going to see next are a lot of tokenization, real world assets coming on chain. A lot of that's going to be represented via NFTs, and NFTs are going to start to provide a lot of different utilities and use cases in the market for representing different goods and products on chain. And one thing that's going overlooked with NFTs in the past and with this new trend is compliance with NFT sales taxes. And that's one thing that I've been very focused on, and that me and my firm have been very focused on. And I actually wrote a book on this topic because I believe it's such a huge risk for marketplaces, for NFT sellers, for Web3 businesses, even for individual taxpayers. And that is the non-compliance with NFT sales taxes. So this is a huge risk industry-wide. In many cases, these taxes can be retroactive and are applied to past NFT sales. So if you're an NFT seller, if you're a marketplace, or if you're starting one, this book is for you, because there's a huge tax risk that can impact your business's bottom line and even business continuity. So get the book today on Amazon, Navigating the NFT Sales Tax Maze, Wayfair 2.0 for Web 3.0. It's available on Amazon. And lastly, I'd encourage you to check out our website. You can sign up for our newsletter, the Digital Asset Digest, where we're delivering regulatory updates and accounting and tax insights related to Web3 and digital assets on a weekly basis. We also have a blog where we're covering in depth on various tax related topics. So there's a lot that we cover there, a lot of value that we add. So I encourage you to check that out. So, right now we're in the middle of summer, and what I find is that taxes, accounting start to be less of a focus for both individuals and businesses at this time. And this isn't the time to take your eye off of these things. What we're working on right now at Camuso CPA with clients are keeping their accounting up to date. For investors, sometimes this means quarterly accounting updates, sometimes it means monthly. For most businesses, we're handling their accounting on a monthly basis. Managing your accounting is the first step, but it's not enough. The next thing that we're working on with clients, both investors and businesses, are quarterly tax projections. Once their accounting is finalized, we're doing formal tax projections to assess where they stand right now from a tax perspective. Is there anything that we can do to improve their tax position before year end? And what tax payments need to be made to the IRS and to state tax agencies now to avoid interest and penalties? These are the things that you want to stay on top on now so you have a smooth tax season. By the time the tax season gets here, your accounting should be complete and your tax payments should be made. And there shouldn't be any big surprises during tax time, but you need to do the work all year to ensure that that's implemented. So if that's you, if you're an investor or if you're a Web3 business and you need to get your accounting up to date, or you need to get your taxes up to date, or work on a tax projection or tax plan, contact me today. Go to our website, camusocpa.com, fill out the contact us form. I'm happy to sit down, have a one-on-one conversation with you and see where you need help and if my firm can provide it to you. So I hope that you all took some value from today's podcast. Until next time, I'm Patrick Camuso, signing off.